Big changes are happening in global money, and most people don't see it. The US dollar has ruled world trade for decades, but now countries like China, Russia, and Brazil are using new ways to trade without it. This shift could weaken the dollar's power and boost other currencies, especially China's yuan. In this video, we'll explore 10 countries leading this change and what it means for the future of money. Let's jump in. Number 10, China. China is changing the game. In March 2025, the yuan was used for nearly $725 billion in international payments, which is more than half of China's foreign trade done in its own currency. That's a new record and a clear sign that the dollar is losing ground. China has also made huge deals with more than 30 countries, providing what's called bilateral swap lines. These are agreements to exchange yuan for local money, helping other countries use the yuan in trade and finance without needing dollars. China's system called CIPS, Cross-Border Interbank Payment System, connects banks in 170 countries, creating a new global network to move money, one that doesn't rely on the dollar's usual channels. Countries like Argentina and Pakistan are already joining in. Big Chinese companies are also pushing to do more deals priced in yuan, not dollars. This is not just about money. It's a smart strategy to increase China's influence worldwide and reduce the dollar's dominance. Number 9, Russia. Russia faces heavy sanctions from the West, limiting its ability to use the dollar for oil sales. But Moscow has found a clever workaround, using cryptocurrencies like Bitcoin and Tether to trade some of its oil exports. By converting yuan and Indian rupees into rubles through special legal frameworks, Russia avoids using the traditional global banking system, especially the SWIFT payment system that is dominated by the dollar. This method may seem risky, but insiders say, millions of dollars worth of oil deals happen every month through crypto. Russia's central bank is even starting to allow more legal use of cryptocurrencies for qualified investors. This quietly loosens the dollar's grip on one of the world's biggest markets, oil. Quick pause. If you're finding this video helpful and you want to support the channel, just hit that super thanks button down below. It's a great way to say thanks and help us keep these videos coming. We really appreciate every bit of support. Number 8, Turkey. Turkey's story shows what happens when a country tries to resist the dollar but faces deep economic problems. Since March 2025, Turkey has sold over $40 billion from its foreign reserves to keep its currency, the lira, from collapsing. But despite very high interest rates, up to 49%, people and businesses keep rushing to buy dollars instead of local money. Turkey's banks are struggling, credit is tight, and inflation is soaring at around 38%. Every time the central bank sells reserves to support the lira, it only delays the inevitable. Turkey's crisis is a warning sign. It shows how hard it is to weaken the dollar's role when your economy is under pressure. But it also highlights that many countries want to reduce dollar dependency, even if it's risky. Number 7, Brazil. Brazil is the world's agricultural powerhouse, and it's making a big move to use the yuan instead of the dollar in trade. In May 2025, Brazil signed a massive currency swap deal with China's central bank worth about $27.7 billion. This means Brazil can get yuan to help its companies trade directly with China, cutting out the dollar middleman. Brazil's government is signaling to farmers and exporters, you can now price contracts in yuan, saving money on exchange fees and speeding up payments. Even though inflation in Brazil is higher than the government's target and borrowing costs are at their highest in 8 years, Brazilian companies are finding yuan-based credit easier to get. This new money pipeline is attracting billions of dollars of Chinese investment in fields like car making, clean energy, and technology. With ongoing trade tensions with the US, Brazil's leaders are asking, what if relying on dollars becomes more trouble than it's worth? By the way, if you're enjoying this video and want to help us keep making more content like this, consider clicking the super thanks button right below the video. It's a small way to show support, but it goes a long way in helping us grow the channel and bring you even more useful insights. Every little bit truly means a lot. Number 6, Pakistan. Pakistan is another country trying to break free from dollar dependency. The government recently asked China for an extra 10 billion yuan to add to an existing currency swap deal, raising the total to 40 billion yuan. This isn't just about holding enough foreign money in reserves. Pakistan is preparing to issue its first-ever panda bond, a type of government debt in Chinese yuan. This would allow Pakistan to borrow money without using dollars. Pakistan faces big economic challenges: high debt, inflation near 28%, and shrinking trade with India. The yuan swap line helps stabilize the economy by giving Pakistan access to Chinese money when dollars are tight. This strategy could change how many emerging markets finance themselves, moving away from dollar loans and using yuan instead. Number 5. Saudi Arabia. Saudi Arabia, the world's biggest oil exporter, is quietly experimenting with new ways to do its oil business without the dollar. The kingdom joined an international project led by the Bank for International Settlements called BRICS, which is testing digital currencies, central bank digital currencies, or CBDCs, to settle trade directly between countries. Saudi Arabia is working on selling oil for yuan and testing digital payments that could handle billions of dollars in trade, cutting costs, and making payments faster. This is a big deal because the petrodollar system, which links oil sales to dollars, has been a pillar of US global influence for decades. Saudi Arabia's experiments could signal a major shift. Number 4. United Arab Emirates. The UAE is taking steps to connect its currency, the dirham, with China's digital yuan through the same BRICS project. The central bank has approved tests where money can move instantly between the UAE and China without using the dollar or traditional banking systems. Banks in Dubai and Abu Dhabi are already onboarding businesses to try this new payment network, which can lower transaction costs by up to 40%. The UAE is also working on new technologies to trade gold using digital currencies, making the process faster and cheaper. By building this digital money bridge between East and West, the UAE is positioning itself as a future hub for dollar-light trade. Quick pause. If you're finding this video helpful and you want to support the channel, just hit that super thanks button down below. It's a great way to say thanks and help us keep these videos coming. We really appreciate every bit of support. Number 3. Argentina. Argentina has long suffered from dollar shortages and high inflation, but now it's turning more to the yuan. The country recently expanded its yuan swap line with China to 50 billion yuan, helping to stabilize its fragile dollar reserves. Argentina is already paying for many imports from China in yuan, saving its scarce dollars for paying off debt and critical goods. Farmers and miners are increasingly pricing their exports in yuan, reducing costs and speeding up payments. Argentina also plans to issue bonds denominated in yuan later this year, locking in lower interest rates compared to borrowing in dollars. With billions of dollars in Chinese investment coming for energy and infrastructure projects, Argentina's future is more connected to the yuan than ever before. Number 2. Hong Kong. Hong Kong is the biggest offshore center for China's yuan. It has a massive swap fund that can provide up to 800 billion yuan for liquidity, helping businesses in the city use yuan without needing dollars. Hong Kong has a special trade finance scheme allowing banks to back imports and exports directly in yuan. Interest rate swaps and other financial contracts tied to the yuan have surged, linking Hong Kong's financial markets closely to China's currency. More impressively, anyone in Hong Kong can now open a digital yuan wallet with just a phone number and ID, no Chinese bank account needed, and spend yuan at many places around the city. With hundreds of millions of digital yuan wallets worldwide, Hong Kong is quietly building a full digital yuan ecosystem, reducing the need for dollars. Number 1. Thailand. Thailand has been a leader in testing cross-border digital payments using both the Thai baht and China's digital yuan. Through the BRICS project, Thailand has processed over 160 digital transactions worth more than $22 million in just a few weeks. This technology cuts payment times from days to seconds and lowers costs by up to 50%. Thailand's domestic payment system botnet already handles trillions of baht a year. Connecting it to digital yuan networks boosts trade and cuts currency exchange fees. Exporters in electronics, agriculture, and auto parts are already using pilot programs to price contracts in yuan or baht, saving on hedging and finance costs. With limits on wallet sizes and daily transactions, the Thai government is carefully testing consumer acceptance while preparing for a yuan gateway role in Southeast Asia. This could help shift the region away from dollar dominance, one quick payment at a time. If you enjoyed this video and want to help us keep making more content like this, consider clicking the super thanks button right below the video. It's a small way to show support, but it goes a long way in helping us grow the channel and bring you even more useful insights. Every little bit truly means a lot. From China's yuan to Thailand's digital payments, these 10 countries are changing how money works, moving away from the US dollar fast. Subscribe to stay updated, and if you like this video, use the super thanks button to support the channel. The story of the dollar's decline is just starting. Stay tuned.